If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course. What's up traders, this is Vee Trades and today I'll be doing a technical analysis breakdown for the Hang Seng Index with the ticker symbol HSI. If you want a chart analysis guaranteed to be done, please read the description below. Also take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly and monthly chart. So here we have the daily chart for the Hang Seng Index. Previously, prices were working down very slowly, and then we started seeing the acceleration of the downtrend increase before seeing a very large reversal in the market. So we were going down inside this channel right here, and then we had an overshoot of it. You can see that this red bar is outside of this yellow channel, which is an overshoot. It led to a massive amount of buying because if we get a break on this side of the channel, we can get a break on the top side of the channel, and we exceeded that by a large amount. And also we were very far away from the EMA, and that just led to a rubber band effect in the market. So we snapped back to the EMA, and now we're slowly grinding around this EMA. So we had this uptrend channel form, so we had this impulse. Now we are inside of the correcting phase of the market, so we could be expecting another impulse if the buyers are strong enough. So it looks like we're inside of this sideways pattern right here. It's okay if we see a little more sell-off, probably back down to that $21,000 level, 21,237 thousand point level, because we did find support there previously before. So it's okay if we go back down there. There's still an opportunity to see that impulse, or we can get that impulse right now. So if we do get that impulse or that another leg up, where will the market go? This would be the first leg up right here. This would be the second leg up, and we could come right back or even exceed the starting move of this impulse downward, and we can go all the way back up to the $25,329 level. Put a horizontal line there for you guys, and it makes sense because it's surpassing this down move right here, this kind of V bottom reversal that looks like we're inside of, and there's a bunch of sellers with their stops above these swings that the market could be targeting to take them out of the market. So that's a maybe. Again, we also had this huge impulse down, and this could just be a correction that we're seeing play out, and we can get another large impulse down. So that's another possibility right now. Again, this indecision in the market, traders don't know what to do, if they want to buy or sell. That's why we're kind of going sideways right now, and the EMA is pretty flat. But I think it's just more likely expecting a little more higher prices before possibly seeing more selling. So I'm expecting prices to at least pull back to the 22,870 level, because that's where the breakout was. So our prices could come back to retest that. Again, if we find resistance, we could probably make another large impulse down. So I'm at least expecting a little more higher prices before selling off. But again, we could easily break through this level and just continue much higher to reach the measured move. So that's another possibility. So right now, there's indecision in the market. Is it better to be a bull or a bear? I'd say it's better to be a bull in the short term at least. You can see that we were trending down, but the trend down was very weak, and then we saw a lot of selling take place. This could be the capitulation or a climax point for the sellers, and now we're seeing buyers step in the market, which is good, seeing a lot of buying. Again, but we're stalling out right now. We're not seeing continuing buying, but again, they could just be taking a break because this is a very large up move. Let's see at the percentage gain from the very lows to the top. So that's a 22-23% gain in an index, so that's a very large amount in a short amount of time. So it looks like we're taking a break, so this is pretty healthy. We're not really selling off a large amount, so people aren't really taking a lot of profits, so they could be hanging on to the position for that second impulse up. So again, if we start continuing much higher, this is probably where we're headed, to the 25,319 level. If we start finding resistance at the 22,870 level and we start selling off, most likely we're going to go back down to filling this gap on the daily chart and maybe even the lows. So it's just a waiting game, depending on what the market wants to do. There's definitely a lot of scenarios that could play out, but again, if we start continuing higher, we're going to go to this measure move. If we start finding resistance, we'll probably continue down to fill in this gap. So that's everything I have on the daily chart. Let's go and wrap this up on the weekly and monthly chart. Here we have the weekly chart, and you can see that we've been going down since February of 2021. That's where the downtrend channel looks like. Obviously, we're going down before. It looks like since 2018, but this downtrend channel is the more recent one, so we'll focus on this. So it looks like the channel, if I connect the swings, it fits pretty good like this. We did have a little break of the channel back here, or a little candle close outside of it, but that's not serious enough to make me consider that this is an overshoot or anything. So it looks like we're still inside of this, or actually if I make it a two-tier channel, it looks like we're still inside of it. If it's just a single channel, then we had an overshoot. And what did I show you guys on the daily chart? If we have an overshoot on one side, we can get an overshoot on the top side, or even a reversal back up to the highs. But I'm not sure if this is an overshoot over two-tier channel. We'll have to wait and see if the market gets rejected again by this EMA and the resistance side of this channel. That would be the telling factor for me if this was an overshoot or not. As right now, traders can play it both ways because the market is not by a determining factor. But at the very least, I'm expecting higher prices, and then we'll have to decide later if this is an overshoot or it's a two-tier channel. So if it's a two-tier channel, most likely we're just going to be maybe finding resistance and going down back to the lows. If it's an overshoot, we should see the buying continue, push up the prices higher, maybe something like this, and that could lead to a reversal in the market and an uptrend formation. So we'll have to wait and see. So like I was saying before, as you can see that we've been going kind of sideways since 2007, before we had this top in the market at the $3,200 level. We did have a head and shoulder pattern. This is the left shoulder, this is the head, and this is the right shoulder. And we are at the support side of this range, so that's a good sign for the bulls. So we could be seeing a reversal in the market very soon if this correction plays out, which I'll talk about more on the monthly chart. Here is the final chart that I would take a look at, which is the monthly chart. And like I was saying before, we had a head and shoulders pattern, and we are range bound since 2007. Looks like these are the lows of the range, or if I drag it up, so this looks like the lows of the range at the 18,574, and the $3,200 level is acting as resistance because we got a test right here. Prices went lower, we had a failed breakout here, prices fell back inside the range, we went up to the top, prices cannot break through it, we found resistance, and now we're still bouncing from the support side of the channel, which is good. So this could be the bottom of this entire down move, because we did make two legs down, or a two-legged pullback in the market. So this could be a center of a pattern for an up move. So we did like two legs down already, and the target was reached, and we bounced from a strong support. So we could see a reversal in the market. We don't have to go back down to the lows or retest it, even though there was a downtrend in play. We could go back up to the highs. Since we came off the lower side, we go to the upper side, especially after these two legs played out. At the very least, like I was saying before, I'm looking for that $2,300 level to be reached, or at least the $22,700, and we'll have to evaluate what the market wants to do once it gets to those resistance levels. But in the grand scheme of things, you can see that if I zoom out even more on the chart, this is the entire price action that I can see all the way since 1987 or even 86. So if I connect the swings for the price action for that long, you can see that this is the major pattern for the Hang Seng Index. Let's go make this yellow, and this is the major pattern. It's been going up ever since 1987, and every time we come up to the support side of the channel, it leads to a nice bounce. And where are we again? We're at the support side of the channel after a two-legged pullback in the market and the bottom of this range pattern. So that looks very good. Again, I think this is more likely to be a bottom than any time before since 2018 because of this support side of the channel that we just hit. So this could lead to a big bounce in the market, but again, it's not guaranteed. The downtrend channel still has steam to pull down the market even further, especially since we could not even reach the top side of the channel. We could lead to a breakout side on this side of the channel. We'll have to wait and see, but this definitely looks pretty bullish. If the support holds at the $18,500 level, this looks very good. We could see higher prices. Again, if we see a breakdown, we could come back to the 2008 2009 starting point of this entire up move. That's where it looks like prices can come to stop out all the longs over here, test this level right here before seeing higher prices. Either way, I'm bullish in the long term because we've been going up for decades and the channel is still in play. So where is my long-term pattern for this index? I'm gonna have to use a measured move from the lows to the highs of 07. And if I move this over, let's take a look at the chart. So my target is the $40,000 level or the $4,100 level, as long as we don't go below the 2008 2009 lows. This measure move is still in play. So over the long term, possibly in the next 2 to 3 years, it looks like this target is attainable. This measure move, the tip of it's like pointing at 2006. So maybe we can get there in the next 3 to 4 years, maybe even sooner, depending on how the market is. But either way, everything is still pointing up. This doesn't look like a lost decade or anything like that. And we'll have to wait and see what the market wants to do. And I'll give you guys updates if anything else changes. So just to give a little summary, on the daily chart, we saw a capitulation occur. We're starting to see some indecision in the market, or at least stalling out for the buyers to make another move up. I'm expecting a little more higher prices before we reanalyze if the market wants to continue to lower or higher. And then from there, the market can easily go back up to the $3,200 level, or we can easily sell off and back down to the $18,500 level. And in the long term, I'm still bullish as long as we don't go below the $10,000, $11,000 point level. We can still reach the $40,000 or $41,000 level in the next probably 3 to 4 years. So that's everything I have for the Hang Seng Index. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel since I want to deliver great content to you guys. See you next time and bye. One thing that I forgot to mention is that in this chart, you can see that whenever we go sideways for a long period of time, we usually have a breakout right after. So previously before, this is a good pattern that could play out again. We were inside this sideways motion since 1993 all the way to the bottom of 03. So that's a 10-year of sideways price action where price action did not really go up over time consistently, but eventually prices played out to the point where it kept up with inflation. Then we saw the massive pump up, and now we're kind of repeating the same pattern where it's 2007 to it's already 2022, so it's even a longer period of time where we're inside of this sideways pattern. So we could see a very large pop up coming very soon, because this stock is pretty much trading back at its 2007 2008 price levels, and it really hasn't kept up with inflation. So we could see another pop up in the market. So we went sideways, we see a large impulse. After a sideways duration of a long period of time, we see a large impulse up, and then we see the crash back down. Then we kind of repeat the process again. We're kind of going sideways. So what I'm expecting is another huge pop up to, like I said before, the $40,000 level before seeing probably a bigger crash back down. So that's what I think is going to play out. A chart that I can provide that's very similar is kind of like gold. So let's take a look at the gold chart. This is the monthly chart for gold, where we have a huge impulse up and we kind of went sideways for several years. You can see that this sideways action is from 2013 all the way to 2019, where the 2019 price level was the same as 2013, or even you could say 2010, because if I drag this range across, so it was at the same price level since 2010. So that's a 10-year, almost a 10-year no change in price. So eventually it needs to keep up with inflation. So instead of moving consistently at like an 8 or even a 12% return, it kind of does it in one big move where we see a huge impulse up, and it kind of just makes up for all the times or the years that the gains weren't made, if that makes any sense. Instead of seeing like the SPY moves very consistently, let's say a 10 to 12% average return yearly, these type of commodities or indexes does the pump up in a few years instead of consistently over a long period of time. So usually you'll see like maybe the big pump up like a 70 or 80% return in a few years instead of getting a 12 or 13% consistently over a longer period of time.